I'm gonna turn it over to Robert here.
Good morning. At this time, I'd like to call the pension committee meeting to order, and I'd like to turn it over to Tim from Valesco, the group that manages the pension plan.
Thank you, Bob. Good morning, everyone. It's wonderful to be here in person and see so many bright and shiny faces this morning. It's wonderful to see all of you, and thank you for giving me the opportunity to be with you today. My colleague Jim Gould is not able to be here in person, so you have to deal with me this morning. I'm sorry about that, but glad we're all in good spirits today. I just wanted to get a time check real quick. You have about, how much time do I have on the thing?
4 minutes.
Everything's great.
You got 20.
Exactly. Everybody's a comedian today. Boy.
I'm here all
right. I will give you a quick overview of what's been happening in the capital markets before I run through the actual performance. We've obviously had a very tough period that we've gone through in the capital markets so far in the first quarter. Both stocks and bonds struggled. And that was the Russia-Ukraine crisis really just deepened a sell-off that was already in place based on rising bond yields, rising interest rates. In anticipation, and now with the fruition of the beginning of a period of interest rate increases from the Federal Reserve to combat the really high levels of inflation that we've all been dealing with, both corporate and in our personal lives. Now, during the quarter, the S&P 500, probably back in February, actually declined more than 10%. So that's typically defined as a correction in the stock market. And that hasn't happened for about 2 years. And that's somewhat unusual that we've gone that long of a period before the stock market had a correction. Historically, they happen every 8 to 12 months or so. So about once a year, you'll get a 10% correction. So as long-term investors, the fact that the market has actually gone down shouldn't be unsurprising to all of us, and it's part of the investment process. As you know, there's no return without taking on some type of risk. So just to set those expectations, it's not unexpected that we would have seen a decline in the stock market, but it's obviously each time it happens, the confluence of factors, whether it's Ukraine, rising bond yields, maybe what we're seeing now in terms of what's happening in China and some of the shutdowns that they're having there could affect supply chains. So it's always something different, but the fact that it happened isn't unusual. From a market perspective, the most interesting trend that we've been seeing, and I've got some data in the charts to talk about that, is this change in leadership of the best performing asset classes in the stock market. We've been in a period where growth stocks, whether it's domestic or international, have done very well. And now, in a period where we're going to be seeing higher bond yields, higher interest rates, value stocks are starting to do much better. We may have talked a little bit about this at our last meeting, but really we now have 4 or 5 months worth of data that really show this, the connection and the relative outperformance of value stocks in a period of higher interest rates. So that's a very interesting trend that I'll talk about as we move forward on the report. But if we go to page 1, just to start looking at the asset allocation of the non-salaried DB plan. And I think I had enough copies for everybody here but one person, so I brought 12 with me. Sorry about that. I apologize. So if we look at the asset allocation for the DB plan, the non-salary plan, 65% equities. That's right in the middle of the range of the investment policy statement. And when you look at the other categories, gray, real return assets, which are inflation-protected securities, and fixed income with the cash, you're in at 35%. So a 65-35 portfolio, because fixed income and real return assets are the fixed income. So everything's within the investment policy range. On page 2 in the non-salary plan, you see the equity diversification. About 50% is in large cap stocks. That's over on the left-hand side of the chart. And I'll highlight just the value exposure, which represents about 11% of equity. So it's a decent percentage of the overall equity. We have some in large cap stocks and mid cap value, and then on the international side, the 29% of international, we've got some in emerging markets, and in the developed large cap space. That's in the broken out piece of the chart next to the pie. So the diversification has been very helpful, and we've seen, especially since the end of the quarter even, the small cap, value, and international continue to perform very well. On page 3.
Can you just talk a second about, you your US large value and blend, but limited or no growth in the large.
Well, it's, we don't delineate and break out growth, but half of the S&P 500 is growth exposure. It's a blended fund. So you have 50% roughly in value and growth, and we have an overweight to value in the portfolio. So there is growth exposure.
Thank you.
Yep. On the on page 3 is the real return asset. So that's at roughly 6 or 8%. In terms of that exposure, 7%. And we have a shortened duration, given the fact that interest rates are moving up. We're cognizant of that. Have shortened the duration a little bit on the TIPS portfolio. And that 7% on fixed income has actually performed much better than nominal bonds in the rising interest rate environment. And having a slightly shorter duration has been beneficial there as well. And on fixed income, we talked about this at the last meeting. This is on page 4, how we were looking at the risk in the bond market, and the longer the duration that you have, the more interest rate risk and impact there might be on pricing in the bond market. So we shortened the duration a little bit more in the overall portfolio. And remember, duration is a function of the interest rate sensitivity and the actual payment of interest on a particular bond or bond fund. So the shorter the duration you have, the less impact there is on rising when interest rates are rising. We've shortened our duration about a year below where the bond market is right now. So we've been able to protect a little bit of capital as interest rates are moving up, but we want to keep that duration about 5.8 years now in the level of the historical range of where the bond market is. We don't want to get too far out of that. So that's where we wanted to bring it down to 5.8, 5.5. And that's been helpful from a performance standpoint over the last couple of quarters. On page 5, when we look at performance, we've got the quarter to date, so that's January to end of March, 1 year, 2 years, and then our inception date, which takes you back just before the pandemic to January of 2020. And what you see in the quarter is that the non-salary DB plan declined by about 4.8%, a loss of $1.9 million, value at $37.9 million. But remember, as the assets came down, your liabilities also came down in the plan as well. I haven't had a conversation with the actuary recently, but they should have moved, maybe even liabilities went down more even than the assets. So that's an important thing to think about when you're looking at the actual performance of the fund itself. Over the 1 year period, we still have some gains, even with the decline in the quarter, 1.5 million, gain of about 4%. And then the 2 year period is just important to keep looking at because we really have come off of an extraordinary period in the capital markets where you had a gain of a little over 19.5% or $11.8 million in the plan. So very strong gains over the last 2 years. So the decline that we have now has not been dramatically significant when you think about those most recent gains. And then the recent, the history of the fund from Alesco's perspective, when we were fortunate enough to win your business at the end of 2019, the fund is up 10% or $7.9 million going back to the beginning of 2020. On page 6, you can take a look at just the impact of the various asset classes that we put together to get you that total portfolio return. And in the quarter, equities were down about 4.8%. And the best performing asset class, if you can think about it, at least on a relative basis, was large cap stocks. And because they rallied back so much at the beginning, towards the end of the quarter, small cap and international down a little bit more. Over the past year, you've got a return of just shy of 8% on equities. Large cap stocks leading the way there, a little bit over 15. And you can see that the biggest decliner there was emerging markets, and that was related to the trouble that China's had over the past year or so, related to some aggressive, reining in of some of their corporate sector, the lockdowns that they've had, and some issues in their property sector. So China's, and now we're looking at potential supply chain issues related to how many people are locked down in that country. So some impact across the global supply chain from China related to the emerging markets performance. But over the 2 years, you can see the equity performance is almost 32%, driven by small cap and mid cap stocks. So the diversification and the money that's been pushed down the capitalization spectrum has been very helpful in a performance mode over the last 2 years. And then again, 13% for equities over the last little more than 2, going back to the inception. we've had outsized gains really compared to historical norms over the last couple of years. Fixed income at the next line down, you can see that we have had these declines in assets, but when you compare it to the overall bond market, looking at the index-based performance, that shortened duration has helped from a performance standpoint just a little bit. A decline of about 6% in the bond market in the quarter, a little bit less than 5.5% in the fixed income holdings due to that shortened duration. The 1 year period, we're down about 4% on the Barclays aggregate and down a little bit less than 3.75% on the fixed income. And then similarly, when you look out 2 years, a little bit better than the benchmark, and then pretty much in line with it, a little bit behind at the inception date, but very close to performing towards the benchmark at that point in time. And then the real return assets. These are the inflation hedging pieces. That's how we like to think about it. Those inflation protected securities, which are government bonds. So they do have a duration. You can't avoid the complete the decline in principal that we see in the performance in the quarter. But the inflation component of the TIPS, which is adjusted when inflation goes up. So the principal and income on the TIPS investment, a government bond, they adjust that upwards as inflation moves higher. You can see that inflation component has been a helpful diversifier in the bond portfolio for the pension plan. And the TIPS returns are less, the decline is less in the quarter, and there's actually a gain in the 1 year period. So having a well-diversified portfolio, you get a benefit to these diversification of assets from a performance standpoint. And then you can see, looking back towards the inception, we've been lucky enough to outperform the CPI, which is no small feat given how much it's gone up recently. But the assets that we've had and the positioning of it has been positive going back to the inception and beginning of 2020. And then finally, I just want to highlight really quickly before I go through the next fund a little bit quicker, is just on page 7 to look at this performance of the value component of the portfolio. We're looking at actual indexes here, index performance, not funds. But since Alesco manages the pension plan mostly with index-based investments, our returns are going to mirror the returns of these indexes as you see on the page. We pick a time period on the left-hand side of the chart called December 1st. That's really the beginning of the period where the Fed Chairman Powell was in congressional testimony, and he started talking about inflation as not being transitory. Throughout much of 2021, the administration and the Federal Reserve was trying to say inflation would be transitory, supply chain issues. We obviously know that hasn't been the case. And so that was about the point they start talking differently, and the market reacted to that in starting to move interest rates higher. Not the Fed, but the actual market itself, and the yields started moving higher. At that point in time, at the beginning of December, we started to see this relationship between growth and value in the capital markets change. And what you see here on the page really is some amazing outperformance for value, whether you are looking at the Russell 3000 at the top of the page, which is the broad US stock market, large cap at the S&P 500, mid cap, and even international. So we've had some declines pretty precipitously in the emerging markets. We saw that in the data, but if you look at the emerging markets value fund, it's actually flat. So on a relative basis, value has done very well, and we have exposure to the emerging markets value component. So even if the overall market is down, the diversification has certainly been beneficial. Over the last 5 years, and we haven't been working with with Centro for that period of time, growth was the best performing asset class. Growth performs better in a low interest rate environment because of the forward-looking earnings are more valuable in a low interest rate environment. With a different interest rate scenario, the value stocks actually do better. They're less impacted by the impact of future growth from that perspective. So we're seeing it, we're moving into a different time period, and historically Alesco has this overweight, that's the description I made earlier, to value, because value does outperform. And when you look at the last 20 years, outside of large cap stocks, value has done better, and that's what we're indicating in the far right-hand column. So there's a method to our allocation madness, if you will, in terms of why we have this overweight. And you move through periods where things may not work out, but over the long term, we're confident that the same trend is going to play out. And we see that in what's been happening recently. The last thing I'll go through very quickly, because I understand since we're meeting with Utica next week, I don't need to go through the Utica plan with you today to save you some time. But we'll just move quickly through, on page 10, the salary plan, just so you can see the impact of that. It's allocated the same way. So here on page 10, you can see that roughly 65-35 mix between stocks and bonds, right in line with the investment policy statement. Page 11 is the equity, again, roughly 70-30 between domestic and international stocks. Same exposure in the salary plan as the non-salary plan. We've shortened the TIPS duration on page 12. You see that as well. And that has been a beneficial diversifier. And then we have the shortened duration on page 13 in the fixed income. And the trades that we made back in November to further shorten the duration certainly have helped from a performance standpoint. Here on page 14, the same time period, you can see similar performance. Value at the end of the quarter in the salary DB plan, $37 million. Similar decline of 4.8%, a loss of $1.9 million in the plan in the quarter. 1 year returns going back to March of 21, you have a gain of 1.5 million in actual dollars, a 4% return. That same little over 19.5% return over the last 2 years, 11.5 million, and then that 10.5% return going back to inception in January of 2020, $7.7 million in the salary DB plan. Similar trend that you see on page 15 in the DB plan as in the non-salary. Equities outperforming from a large cap perspective, and over the long term, very good returns, 13%. Fixed income beneficial return compared to the Barclays Aggregate Bond Index because of the shortened duration in all but the inception time periods, and real return assets, those TIPS outperforming the nominal bond. So well diversified performance standpoint. And I just included the same chart on page 16 in terms of value. So with that, I can entertain any questions. I think that's about time I have been allotted. We've got some charts here at the back if you're happy to look at those in terms of the capital markets review, but does anybody have any questions?
Tim, just, for a net out, so the last 2 years, even with the loss, we're still very good on the gain side.
Correct, that's exactly right. Yeah, just looking at the salary plan, a gain of 11.5 million over the last 2 years, even with the loss of about 2 in the first quarter.
And you mentioned in the beginning, the plan's liability is decreasing. Why is the plan's liability decreasing?
Well, this is just, I'm making the assumption as bond yields move up. The discount rate of the assets are probably less, so your liabilities have gone down. This is strictly a, back of the envelope calculation, but that would be my guess. And all the reporting that you see from other plans in the first quarter shows that the typical pension plan liabilities dropped roughly in line, maybe a little bit more than the assets decline. So that's a positive. Remember the inverse relationship between interest rates. When yields go up, prices go down, but the discount rate is affected and your future liabilities are lower as well. So that maybe is a net positive.
You, in your presentation, you mentioned China.
China?
Right.
Oh, yes.
Yeah. What big effect do they have on this plan?
It's primarily in the emerging markets holdings that we have in the portfolio. So it's not a huge piece, but it could be 30%, I think, of the emerging markets holdings, which is a percentage of the overall portfolio. Alesco has historically underweighted international in general in our portfolios because we're concerned about currency and just outside of the U.S. But we do historically want some international exposure, but we try to limit it. We're concerned about currency effects and just things you can't control internationally. But it is long-term a good diversifier, but we try to limit that exposure.
Any other questions?
On a current return basis, approximately a ballpark number, what are the TIPS paying out?
Sure. Yeah, TIPS are it's kind of amazing. I got a chart here because I anticipated that question.
I ask it every time.
So the current yield, so this is, I'll just make this comparison between the end of the quarter and just at the middle of this week, because yields have moved up a little bit more since the end of the quarter. So long-term nominal tips, which are about 7.5 years duration, at the end of the quarter, we're paying 2.5%. They've now, the duration has not changed much, but they're up to about 3% for the yield right now. So that's about a 50 basis point increase in a couple of weeks. Higher yield, higher yield,
Higher income.
higher income, correct. Correct.
Okay, one other thing though about the tips, if in fact the inflation is transitory, the interest rate, the coupon on the tips gets readjusted.
It does. So think about 3 years ago, before we had this inflationary spike, tips were not as valuable of an investment because we didn't have higher levels of inflation or expected levels of inflation. So they really are in a portfolio and insurance policy for periods that we're moving in right now. And if inflation were to drop, suddenly, then tips would be affected negatively because of that. But we don't seem to be in a period where that's a concern.
That chart was interesting on page 30, caught my eye.
Oh, yes,
I thought
that's
that- I thought
actually,
that was
yeah, no,
interesting.
good point there. I should address that. Thanks, Nick, I appreciate that. So, the chart on page 30, I briefly referenced the Russia-Ukraine conflict at the beginning of my comments. And that has had, from our own, I guess, consumption of the media, certainly an outsized impact on all of us. And, the horrors that we're looking at from a humanitarian perspective are just awful when we think about it. But when you bring back the humanitarian conflict to the, I guess, the strict structures of finance and numbers, global conflicts like that historically have not had a negative impact on the capital markets, as odd as that might seem, as horrible as what we're looking at. And the chart shows you, looking back at past global conflicts. We look back to World War I, the Korean War, and more recently the Iraq War, and we see that over the period of those conflicts, the U.S. stock market is represented by large cap stocks generally, ends up moving higher from the beginning of the conflict. There might be a downturn, which we've seen, but by the end of the conflict, no matter how long it is, whether it's a few months like the Iraq War or years for World War I and World War II in Korea, the actual market returns are positive during that period. And we tend to have higher volatility, but for investors, the important thing to think about is that this is not a reason to panic because of the global conflicts. The markets view them as transitory, and they're forward-looking mechanisms, the market is, and they've already tended to price in that these things will be settled in some manner. And I think we're starting to see that because the market has adjusted more to what's going on in Russia and Ukraine, that the market's anticipating an end game that maybe Putin won't win, and the market's reacting more to the increase in interest rates and what the Federal Reserve is saying versus that particular conflict. But the interesting thing about the chart is that we do see more volatility in more recent conflicts than we did in the past. And I think that's attributable to the fact that information flows so much faster than it did 70 years ago during World War II or longer.
Good point, good. Those footnotes in the back were kind of nice with the core inflation and the fuel, all that. I thought that was really good information.
And we're expecting that the Fed is likely to raise interest rates about 7 times this year. So we could have a Fed funds rate approaching 2% by the end of the year. And just yesterday, I think it was in an interview, the Fed chairman said at the beginning of May, they're on board to raise the interest rates 50 basis points. So short-term rates are going to be coming up. We've got sort of a flat yield curve now, maybe slightly inverted. That's the market anticipating sometime next year maybe we'll have a recession. Inverted yield curves don't always indicate a recession, but there's never been a recession without an inverted yield curve. So it's one of those weird data points. But a lot of things happening. There always is in the capital markets. And you try to navigate and then learn what to navigate and what to ignore is always the challenge.
what might be helpful is if you mention what that means in inverted yield.
Oh, sure. Yeah, so if we look on page, I think it's page 38, right?
No.
Yeah, page 38 of our deck gives you a sense of that. So, if I can get to it. Make sure I speak to it. So the top chart shows you the Treasury yield curve from short-term notes at 3 months, 6 months, out to the 30-year Treasury bond. And so the yield curve is the yield based on what all those denominations of the Treasury bonds and notes are from 6 months to 30 years. Typically, you have an upward sloping yield curve. Short-term rates are lower, yields are lower, longer-term rates are higher. And that's roughly what we have here. But if you look at the top of that chart, you can see how much rates have gone up from the end of the year to the end of the quarter. And they're up even higher than that now. And the market is anticipating the Federal Reserve moving rates higher. So the yield curve shows you it's somewhat flat, and the inversion is between the 2-year and the 10-year. 2-year note and 10-year note. There's a decline between those. So that means the future is, the market is anticipating the future could be a recessionary period. If that's what the longer term rates are actually the market's indicating. So that's what an inverted yield curve is, when longer rates are lower than shorter term rates, anticipating a potential recession in the future.
Any other
Thanks,
questions? Any other questions? Good. Very good, Tim. Nice report. Great seeing you physically.
I know, it's wonderful to see all of you. Thank you very much, and hopefully we can keep this going.
With no other questions, Mr. Chairman, that would conclude our pension committee meeting.
Excellent report. Excellent.
Take just a couple of minutes so we can do our camera work.
Welcome folks here. Our next venue here is we're gonna have a legal committee, and I spoke to Joe, who's our legal committee chair. I need a motion to go into executive session to discuss pending litigation and personnel matters. Made by Tina first, second by by Anthony, all in favor?
Aye.
Okay, at this time, we're gonna be in executive session, I'll wait till you to
I put my username down.
Okay. We're back in session. I wanna refer to Joe from our legal chairman.
Certainly, we had an executive session for the legal committee where a personnel and a legal matter was, discussed and no action was required.
Very good, thank you. Okay, so, we're just waiting for, staff to come in and we're gonna go right into the finance committee meeting. I'm just gonna give you a little background here before Melissa comes in, so we can keep things moving.
We gotta break the video.
Okay,
So just
technology, guys, remember the days? $13%, which means in dollars about $800,000. So basically, Melissa will be leading up the finance discussions here. So that's basically the amendment. It's a positive amendment to the budget that we started April 1st. Okay. I'll just wait till. Okay, we're in session for the finance committee. Okay, all right, so Melissa, I just,
Coming, I'm sorry.
okay, you can just,
Yep.
okay. We just, I just kinda gave a little overview, cause I wanna keep things moving a little bit here.
Yeah, absolutely.
We had a 13% increase with our STOA. Dollars was about $800,000, so it's positive. So what we're doing basically, I'm asking for a motion to the board to approve amending the budget up $800,000 based on our STOA.
So moved.
Tony, second, Luella, all in favor, aye. Okay. I almost know what I'm doing here sometimes.
Yeah, you
know?
did great.
Well, the other thing, now we wanna get into, the liability insurance. Our good friend John is here today to discuss, the liability insurance and how we did it.
Okay, good morning, everybody. Pass those around, you can read it. We'll do.
Okay, I can share, I'll share with you.
I got more.
We've got more. Okay, just as a quick recap, our major liability policy is new effective May 1st. We are self-insured on our auto liability for the first $1.5 million, and on our public liability for the first $1 million. Last year, we had 3 carriers, and this year, we have the same 3 carriers, and outline each, but what you're mainly interested in is the summary. We did, in my opinion, absolutely great. If you look at the rest of the insurance market, our costs are going up about 6.95%, which is far less than we anticipated last year. So for 22 to 23, our costs are $1,452,066, and for the prior year, they were $1,357,689. We have the exact same insurance companies. Our broker, RPS, did a great job. So if anybody has any questions.
So a little bit under $100,000 increase.
Right.
John, is that because of the market or because of claims, or is it just both? Okay.
The market, the business insurance market is up double digit. Every client I have is experiencing double digit increases on auto and public liability.
Questions?
So this is good.
Questions for John, board? No? Okay. Need a motion to move to the full board. Robert, second, Tina, all in favor, aye.
Okay, thanks, guys.
Okay,
Have a
thanks for
great
all
day.
your, thanks for all your help.
See you later.
Hi, John. I got it all.
Okay, folks, keeping things moving here. Caitlin, come on up to the table. You're gonna talk about resolution 3B, the bike share program. Caitlin.
Thank you, Mr. Chairman. Good morning, everyone. So this request for proposal was sent out on March third. In total, we sent out 15 proposals, and on March 24th, we received 2. The evaluation committee determined that VO Ride offered the most advantageous proposal. They offered a self-funded program, so we're not expecting any expenditures or revenues from this contract. So it's our recommendation that the board award the bike share program to VO Ride for a 1-year term with 4 one-year options.
Questions for Caitlin on the bike share?
What counties?
Currently, it will just be in the city of Syracuse, but we're looking to extend out the county of Onondaga and quite potentially the rest of our counties as well.
That's for this year.
Yeah.
How many?
How many
Bikes.
bikes and scooters? So I believe, starting out, we're gonna have 250 bikes, 250 scooters.
You know, the way that works, Monty, is, they're gonna come in, we do an initial assessment. We're in a unique position, the city of Syracuse has their program.
Right.
And because it's their property, they can really put them wherever they want. So Chris and I are going around to towns and villages and talking to them about where we can put them, because we can't just walk in and say, we're putting a bike rail here. The response has been pretty overwhelmingly positive. They all want them. And then we're gonna work with VO and their census data and work with the towns and villages on where they think they might be and then determine, you know, this town might get 50, this town might get 25, and, you know, spread them around. And the best thing about it is it's completely fungible, so if we find out that 50 was too much in the town of Gwinnett, we can scale back that by 15 or 20 and put them someplace else.
But what would be the process of mounting these bikes on?
So everything is managed by VO Ride, so they have people, that work for them, that go out on a regular basis. I believe they have an app that shows them where all of their bikes and scooters are and tells them when or where they need to be redistributed if one area has too many.
Cause I noticed by my house, somebody left 3 of the scooters there from my house.
Yeah.
Let me see, one is still there. I don't know what the central, city's in charge of that, but we have.
Right, so they do have incentives for users to park them within the corrals, but in all technicality, you can park them anywhere within that geo-fenced area.
EJ, you gonna drive one of those bikes in for us, so we can see it?
I don't want it home.
All right, folks,
And Julius, they will go around, so VO will go around and hopefully at some point grab those vehicles and put them in corrals. It's not Central's responsibility, this is revenue neutral to us. No, we don't get any revenue from it, we don't have any expense from it.
Somebody snatched 2 of them, but one is still there. Cause they did have
Leaving
a
that for
charge.
you.
Huh?
Leaving it for you.
If it were charged, I probably would have took it here.
okay, folks, no other questions, any motion to move this? Okay, Monty, Tina second, all in favor, aye.
Aye.
Very good.
Thank you.
Resolution 3C, underground storage tank top replacement, Chris.
Thank you, Mr. Chairman. Good morning, everyone. This resolution is for the underground storage tank top replacement project. This will be paid for using grant funds. The invitation for bid was publicly let on March 1st. 21 bid packages were sent out. 8 additional bid packages were requested. On March 22nd, 3 bids were received, with the lowest responsible bidder being LaValle Brothers Construction. Therefore, it is our recommendation that the board award the contract for underground storage tank top replacement to LaValle Brothers Construction.
Just replacing the tops, not the tanks.
Correct.
Any questions? Chris, pretty non-enlightening conversation. So, but someone's gotta do it, Chris.
Poor guy, someone's gotta do it.
So it means no questions. Okay, need a motion to, move this forward. Julia, second. Darlene, all in favor? Aye. Okay, very good. Any
Tell
other,
Caitlin to give you something a little more meat to it.
any other financial stuff to discuss, Melissa?
Only that, obviously there's no financials presented this month, they will be, a draft year-end financial will be presented next month. We started our annual audit.
Okay.
Ready to finish?
Yeah, go ahead.
Okay, and then the audited financial statements will be presented in the June board meeting by our auditors, Bonadeo Group.
Cause we closed the year March 31st. Go ahead, you got a question?
I have a resolution.
Oh, you do a resolution?
Yes.
Did I miss you on, maybe, I might have missed. Did I miss?
Professor Green.
Green, huh?
Yeah, I'm sorry. Oh, boy, am I, I'm sorry, Tara, I'm
Hot,
really,
Nick.
I got, you know what it is?
She's bringing money. I'm bringing money today.
Okay, yeah, okay, good. Tara, I apologize. Go ahead. Resolution 3D.
Thank you.
Got too much on my plate.
The resolution is just to file our newest 5307 and 5339 grant application. This will allow me to file for $3.875 million worth of projects. If you have questions, I can email you about the projects, otherwise it's.
That's good, that's some good work with all that money in there. Good job, Tara.
If you're gonna buy buses,
I'm gonna buy buses,
How many?
vehicles, 18
18 buses? For when?
next year. This year?
Yeah,
They're almost here.
We don't have the grant yet, but the bus is on the way.
Okay,
We
motion,
started receiving them, 4 of them are on property.
That's how I was gonna end though.
Yeah.
So you ordered them before then?
Oh, yeah, 4 of them came in, they drive them from California, so they come in and do your trips and grabs, so we got 4 on property, the others are coming over the coming weeks.
One question. Buses that you get now, you think it's gonna be absent those, on the front, or the bus? You can't sit in the others, you know, are they gonna be not applied in the bus?
Seats?
What is it?
You know, the seats that they had took off, that people couldn't sit at the passenger. couldn't sit.
Oh, the front 2 seats that are barrier,
Right.
yeah, now it's just a wall, so you don't even know that there was a seat there.
Oh, okay.
So now,
Previous
I don't know what buses were.
previous buses had, an issue where they were designed without that front barrier.
Mhm.
And for safety purposes, we flipped those 2 seats on. Every redesign since, I believe, 2016
Mhm.
has the double barrier.
Okay.
So that allows you those seats to be available.
How many vehicles?
3. And we have 2 facilities projects in there as well, $250,000 a piece, LED lighting and the bus wash.
good stuff. Motion to accept her filing the grant. Monty, second, all in favor, aye.
Spend that money, baby.
Melissa, anything else? We good?
No, I think we're good.
Okay. All right, very good. Are we, I'd like to go right into the regular meeting, or you guys switch?
one
something
break,
up?
take it, break it quick and then let us know when you get back. Go ahead.
Okay, very good. Welcome to today's official April board meeting. I'd like to start with the Pledge of Allegiance. And I'd like Darlene to lead the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Just a moment of silence for the people struggling in Ukraine. Thank you, I'm sure they need that too. Okay. All right. Okay, there is a quorum present. The next meeting, folks, is May 20th. It's a little bit up more because of the holiday. It's the following week. There will be a governance meeting, and we'll be discussing that with Darlene. And also an audit and finance committee. Governance starting at 9, audit and finance at 9:30. Can I have a motion to approve the regular minutes of March 25th? Luella, second. Tina, all in favor? Aye. Okay, we're gonna have our chief executive's report. Frank.
Thank you, Mr. Chairman. As I noted, there are CARES funds, that are expended. Personal funds, we have about just under 5 million left to draw down. And then we would start tapping into our ARPA funds, which we have not touched yet. Happy to report at the printing of this report, we didn't have anybody out with COVID. So, you know, while you are seeing in the news that there are spikes here and there, we have not experienced that here, so that's great news. We continue talks with Oneida County regarding their rural transit. Various meetings that we've held, as I noted there, you know, BRT on demand bike scooter. Most recently, we had a meeting with SMTC this week engage them to help us with public engagement and public input as we embark on a system redesign. We need to hear from the public, especially those that ride the bus. We also were trying to reach out to those that don't ride the bus to find out if we changed it, would you ride the bus? So they will be helping us with that, and that will most likely be a 9 to 12 month process to gather that information. Public transit funding, as mentioned in A&F, we did get all of the upstate authorities, all of the upstate non-MTA authorities. All the upstate authorities got about a 15% increase in STOA. We received about a little over 17%. That's due to Assemblyman Magnarelli securing us an additional $750,000 above and beyond what our sister properties along the thruway received. $250,000 of that is to help us cover losses from the fair. As you know, we run park and rides to the fair for various locations in the county, and we operate shuttles from the Orange Lot and from Willis Avenue. We contract with the fair, and it does cost us, we don't make money on that in any given year, and most years we lose money. So he's secured that. We've been asking for that for years to help us with some funding for that. The other $500,000, he wants us to come up with a plan to enhance rural transportation, so getting out into the transit deserts where there isn't any transportation, and see what we can do. BRT continues to move along. We have set an RFP out for a transportation consultant. We're looking to hire a firm that is going to come in and help us. The Smart One study came up with a plan on what does BRT look like. Now we need to implement it. And we want to hire some experts to help us do that. And they're not going to stop at BRT. They're going to help us with our on-demand. They're going to help us to make sure we're rolling out the bike and scooter share in the right way, and any other, and the system redesign. And they're going to be very hands-on. It's going to operate much like we have a service contract with CNS engineers. So we're doing a project here in the building, and we need engineering work done. We just call them up and they tell us ahead of time, and we know, they bill their partner rates at this rate, the associate rates here. And it's gonna be much like that, so we can call them up when a project arises. Continue to work with the Independent Living Council. We've had several meetings with them. As I mentioned before, Bike and Scooter, Chris and I have been going around and doing our road show, getting the towns and villages interested in this. Jobs to New America, we had not to be confused with the JMA across the street. We had a virtual meeting with them. It's clean bus, clean technology, clean jobs type of thing. We're gonna continue our conversations there, and then Senator May has been instrumental as well. She's very interested in the BRT, and we've had a couple of meetings with her and her staff to try to get help, furthering that. And we also have applied for some grant money through Senator Schumer's office and Congressman Katko. $5 million was our ask. It was $50 million. And we were told that was a bit of a reach. So I think we went down to 15. We went down to 15 last year, and that was a bit of a reach. So now we're down to 5. Maybe we can get $5 million and some discretionary funding, and that'll help us with my BRT. That's all I have. I'll share questions. All right, and then in the interest of time, I'm going to ask senior staff as you go through your reports to be a little brief. Yes,
Good morning, thanks, Brian. Good morning, Mr. Chairman. Good morning, members of the board. To keep it quick, last month we talked about the PTSB review, the Public Transit Safety Board review. I mentioned that we concluded the audit. We're waiting on our final letter. We did receive our final letter. The highlights aren't bad things. I'll throw it on the table so you guys can look at it. But those are what the auditor reviewed. We took a look at throughout Syracuse and Utica. Everything came back. There were no findings found. Everything, I believe, at the end of last year, you guys approved the system safety plan. It was on the table, and we just approved the corrections. I think 2 years ago, it was probably a 4-inch binder. So he certifies that we're in compliance with that. Of course, that'll be due in March of '23 to be recertified by them. So I just wanted to pass this along and give a special thanks to the folks here that were involved in that, and Brian Green, Mike Robinson, Josh Kidder in maintenance, Eric Jacobson on Utica, and John Boylan here in Syracuse on maintenance that helped conduct this audit and work with the PTSB to get the buses and the vehicles and all the information to review. And it was a successful audit, and we're happy to say that's another one that we can hang our hat on, that, you know, what we're doing and how we're maintaining our assets are correct and properly done for state regulations. That's all I got.
Thank you, Jackie.
Good morning, everyone. I'm just gonna stand. I have a very brief report. As you know, we didn't really get the recruitment that we were looking for this last class, so we are holding another new class on June 20th. We're gonna open it up, and before that, what we've decided to do is have an open house at Centro on May 11th from 9 to noon and 3 to 6, and then also on May 14th from 9 to noon to see if we can get some more candidates recruited, basically. So that's all I have unless anybody has any questions. Just a reminder too, I sent out the board members the reminder for the financial disclosure statement. I think you guys got my email. If you have any issues or problems.
There's some people that might need some tutoring, so I offered your
Yeah.
services.
Yeah, that's fine.
Okay, there's a young gentleman over there, he raised his hand.
That's okay. Yep, and what I'll do is I'll also send another reminder out to all board members the beginning of May, because the deadline is May 16th, I believe. Okay?
Two things to remember when you're on this board. You know when tax day is, you know, you gotta remember when to file.
Yeah.
A month before. Just remember that.
They kept saying they're gonna send it to me, but I get in there and I can't put my name and my code in. So
Your password.
my
then?
password,
I can speak to you later, Julius, about it, okay?
Okay.
All right, thank you.
Good morning, everybody. I'm gonna stand as well. My report's gonna be very brief. Just gonna give you an update on ridership. Our ridership in March was about where it has been, about 50% of where we were pre-pandemic. From our paying customers, overall, it's about 67%. Not really much of a change. We are starting to see some uptick in the month of April. I believe due to, the changes in the fares. So I'm thinking in April, we'll start seeing ridership move in the right direction. It's not gonna be fast-paced, but it will be, I think, a slight increase, and that's good news. And that's really all that's really all I have for this month. Unless there's any questions. Okay.
Good morning, I guess I'll say standing as well too. Briefly, I'm gonna talk about Maintenance Connection. We went live with it on April 1st, so I think even though we had a lot of challenges and so on and so forth, there really were. We weren't disappointed. The good news is we created work orders, we put parts on work orders, we got the inventory squared away, and a lot of people made this happen. So some of Linda's team, the stockroom guys, the engine shop, the air and electric guys, all participated in this thing going live. We still have I'd say second phase that we're working on, where we're actually making adjustments actually happen. Things like preventative maintenance programs. We had literally separate preventative maintenance programs for each spot. We discovered that we can actually combine some of the steps and procedures within one maintenance, with one preventative maintenance. So John Boylan is actually putting that together and doing different intervals with each one of those. This is a highly flexible program. It looks like it's gonna work out extremely well for us, so we're kind of excited to get this going. Any questions? Good luck.
Good luck.
Thanks.
Hopefully we don't need a lot. That was a huge undertaking.
Yeah.
We spent thousands of hours, and I know it's over dozens of employees getting this up and running and replacing the AS400, and they've just done a phenomenal job.
And there's always a lot of little curves once you get in and do it.
Jeff?
Alright, we took a trip, EJ, Mike Rice, Josh Kidder, and myself took a trip to SARTA and Blood Power. You would ask for some pictures?
Yeah.
So Jason,
Thank you.
This is their fueling station here. It's very similar to a CNG fueling station. Okay, as you see, keep going. There's that big tower which holds liquid nitrogen or liquid hydrogen. Keep going. It's very tall, 40 feet up. It's very similar because it compresses it into a compressed gas that's 5,000 PSI. And then it goes through and it cools it down, and next one, it's gonna store it, keep going. Stores it in a tank just similar to ours. So it's very, the operation is very similar to what we have. Keep going again. Here's one of their buses. There's no engine. It's a fuel cell in the back. Here's Josh Cater. They let us fuel it, which is a really neat experience. It was exactly like fueling a natural gas bus.
How long does it take?
About 8 to 10 minutes. It just depends. Yeah.
100 miles to get on.
Well, that was one of the questions we asked them there. It was about 270 miles. And we asked about weather. If when it actually is affected, when it's 20 degrees, you're getting 15 to 20% less. You know, when it's above 90 degrees, you're getting about 15 to 20% less miles.
So what's it do when it's sub-zero?
It's about the same thing, yeah.
It's
I mean,
the
once
same-
it goes below 20 degrees, that's what it's doing. It's trying to heat up.
So if you get into a stuff or something like that, how to pass a culvert through it.
They said they had 18 inches of snow. It was supposed to be like 2 or 3 inches, and they said that it was 18 inches, and these buses were able to get through. They got a lot of power, and they're heavy. Okay. Keep going.
They're 40,000 pounds versus 32,000.
40 versus what?
40,000 versus 32,000 for us.
And again, 6 to 8 minutes to fuel that bus versus 6 hours to drive an electric bus.
And it's the same thing as an electric bus. It's using electric power to move this, so it's an electric motor. Here's their paratransit bus, and I get to, here's the inside of it, right? Oops.
Yeah, it is, sorry.
That thing in the back, you see it's like strapped down, that's actually the tank. I particularly didn't care for it, he had only, 6 seats here and 1 passenger for handicap. And they were really tight back there. We don't have to go with this, but that's just something I thought that was neat. I did get to experience, when I walked over, they had one up on a lift and the exhaust was coming on. You wanna go to that one? Yeah. Little video of the exhaust. What's neat, it was like being by a dryer, so you had warm air coming out and water dripping, that's it. That's all the exhaust is. Yep.
Jeff drove it also.
Yes, I got to drive, actually, we all got to drive the big bus, and EJ didn't want to do it, even though we told him. So it was a very good experience there. Going to the next one, we went to Plug Power. We sat down with a group of people. We had Rochester Transit, Houston Transit, and Nova Bus there. We asked a bunch of questions about where they think the future of transit is going to be. Was it going to be battery electric buses, CNG, hybrid, or hydrogen? Houston was very adamant about getting rid of electric. They go on the road for 18 hours. They can't have buses come off. So they were very excited about seeing what they had to offer. They offered, oh, here's EJ. This here is the fuel cell. Well, EJ's like, hey, get me in there so you can see an example of how big it is. An engine's huge. It's very small. It generates electricity for the bus, and it's the wave of the future. They do have, they create hydrogen and they sell it, and they have a big board on the wall, and they've shown us some of their big players, Amazon, Walmart, telling us exactly how much they have in their tanks and when the next delivery is going to be down to the hour. Very fascinating. So good information, and we have a meeting next week in regards to the Lono application.
Good, very
All right.
good. Thank you for doing that.
You're welcome.
Now, if we visit any warm states, just remember you need a board. member.
Absolutely.
Might need 2. So check the board member.
North Dakota, so.
Guys
No,
are
no.
in California right now doing the bus build, so you might wanna go out and make sure they're doing it right.
There needs to be some oversight.
Right. All right, that concludes senior staff report, so thank you very much.
Thank you. Joe.
He's got his own line. He's got his own line.
I might let Melissa do Joe's report.
It's not that hard, done by anybody. Call West Quarterly, end of the month, or end of the quarter was March 31st. We are practically back to a normal ridership level in our paratransit division. We were up 29% over the previous quarter a year ago. So based on what we believe is gonna happen over the next year, we're pretty much back to our normal service levels. We've also brought back our entire staff, so we're fully staffed down there, which allows us to obviously serve the customer at a better and faster pace and we meet our productivity goals, which is important. As Brian mentioned a few minutes ago, and you heard Tara purchasing some vehicles, they are starting to arrive. We've We've got 18 CNG.
17.
12, yeah, 35, 18, 17. 17 diesels coming in. Some of the diesels that are coming in are actually what we call a high-back vehicle. We're getting rid of our MCI or our Greyhound looking bus. We're going away from that. The newer ones that we have are gonna be going up to Oswego, which is helpful for the college students, but in Auburn's perspective, we're going to this 40-foot, looks like a transit bus, but we're putting in cushioned, very nice seats to help them out with that ride. It's about a 40-minute ride, so it makes us more versatile with a standard 40-foot bus. It also makes parts a lot more versatile. That we're not carrying a bunch of different things, and it's gonna help us maintain. Supply line for our manufacturers a little slow, but it has not affected really our delivery and freight checks a couple of days ago, but so far so good. That's it.
Today, let me see, we'll go back up to, audit and finance. I kinda went out of order there, Joe, but I don't know if I came out today.
I know.
So, the first motion that was approved in committee to move to the full board was the 22-23 operating budget with a amendment. The amendment was 13% up by $100,000. So we had a motion to accept that amendment. Robert, second. Darlene, all in favor? Aye. John Maloff, our insurance broker, came in and discussed with us the new policy. Last year was about 1,357,000. The renewals at 1,452,000, which is about an increase of 100,000. Motion was made to bring it to the full board for approval. At this point, I need a motion.
Move.
Okay, Julius second. Monty, all in favor? Aye. Okay, bike share program. Caitlin brought forth about 250 bikes, somewhere in that range. We're getting out of bus business, we're gonna have all our riders out of bikes, okay? And we discussed that for a contract, with the bike share program for 1 year period, with VO Riding, with 4 1-year options. A motion was made to bring it to the full board for approval. At this point, I need a motion. Tony, second. Darlene, all in favor? Chris brought forth, the underground storage tank that I thought was very interesting. And, I actually, I'm gonna look at that tank this weekend, I'll come up. And, there was a replacement there to award contract to LaValle Brothers Construction for the underground storage tank, top replacement. That bid came in at, 260. It's interesting sometimes when you see bids, cause that range was 260 to 438, you know, so, good work there, Chris. Motion was made to award contract to LaValle Brothers. I need a motion, please. Robert, second. Darlene, all in favor? Aye. Resolution 3D, to accept some grant money, some nice money that Tara presented. Good dollars here, and well needed. A motion was made to bring it to the full board for approval. At this point, I need a motion. Tony, second. Darlene, all in favor? Okay. Also today, folks, the other thing was, Melissa reminded me, the audit will be underway with Bonadeo, okay? And end of the year financial statements, we don't get them this time because March 31st is the end of the year. So, we'll be back on schedule next month, and, when will the audit be totally completed when you present to the board? June. Very good, thank you. Pension committee report, Robert.
This morning, we had a pension committee meeting. Tim from Alesco gave a very informative report. No action was taken, no actions needed.
Okay, legal committee report. We went into executive session for the legal committee. Joe.
We went into executive session, as you said, discussed a specific legal matter, and no action was required.
Also, we had a personnel committee, discussion when we were in executive. Joe.
We did have a personnel committee discussion, and the committee, moved forward a motion to the full board to award our CEO Brian Schultz a $12,000 raise to approximately $198,000, retroactive to April 1st.
Very good. Now I'd like, do we have to close this meeting to go into the annual meeting, or can we just go from there?
Motion.
Okay.
Did you want a motion?
Motion to approve, first of all, the salary adjustment for CEO. Luella, second, Tony, all in favor? Aye. Okay.
We just have to note that this also constitutes the annual.
Okay, so I'll make sure that for the minutes, this will also be the annual meeting. At this point, I'd like to turn over to our nominating committee, Luella, who worked on this diligently down in Georgia with her family. And Nick Lane was calling me again, get him out of here.
For the 21-22 slate for audit and finance, we have Nicholas Mayor for chairman, Robert Anthony Davis, Joseph A. Hardick, and Darlene Lattimore for audit and finance. Governance, Darlene Lattimore, chairman, Neil Burke, Robert, Luella Williams for governance. Legal, Joseph Haddock for chairperson, Robert C. Anthony Davis, and Tina Fitzgerald. Nominating committee, Luella Williams, chairperson, Robert C. Monty Flynn, Joseph Haddock. For pension, Robert C., chairperson, Neil Burke, Joseph Haddock, Darlene Lattimore. For personnel, Joseph Haddock, the chairperson, Tina Fitzgerald, Julius Lawrence, and Luella Williams. That is the slate for
slate of committees.
For slate of committees.
Okay, and slate of officers, did you take care of that too? We're gonna come, we're gonna,
Okay,
yeah. All right,
thank you.
you look good, Luella.
The slate of officer is Nick Chair, Bob
Sue Slidger.
Vice Chair.
Vice Chair,
We're gonna make that.
Darlene Secretary, Tina Treasurer.
Very good. Okay, so I need a motion on the table to accept, the officers of the authority. Julius, second, Darlene. I'm gonna give second to Tony, I think Darlene was on next, was Darlene on next, right? I'm gonna give it to Tony. Give it to Tony. Any questions, anybody else interested? All in favor? I want to, thank everybody for, the trust that you have in me to lead once again. Thank you. Thank you. At this point, is, any old business? Any new business?
Very quickly, Mr. Chairman, it happened yesterday, and I apologize for not bringing it up while I was standing. Rome, membership, and we set over a TA yesterday, tentative agreement, actually yesterday afternoon. They will be voting on it in the next 2 weeks, and assuming they ratify, it'll be brought to the board.
Great, I'd like to get that, I know you're working hard with your group on that, and it'd be nice to have everybody set.
Yeah, we're hoping to have Uticus done fairly quickly.
Okay, that's great, then we got all labor settled and everybody's good, and that's good. Okay, everybody, move for adjournment, have a great weekend, okay?
Thank you.